Hey, what's up, guys? How are you? Should be live already, right? Let me see. My screen says live stream offline. Tomorrow we have options expiration, and we also have POWEL at 11 a.m. Eastern Standard Time. I cannot see myself yet. Can you guys see me? Alan Shiftahal. What's up, bro? There you go. Standard Time. Alrighty. So there I am. Welcome back to another live stream, guys. What a day, what a day, what a day we had today. So, green day across the board. Please drop a comment down below. Hit the like button. Let me know what stocks do you guys want me to go over. I want to share some trading ideas with you guys. So, the bulls are in total control of the markets. Russell 2000 went up today 0.58%. The NASDAQ went up 1.21%. The Dow went up 0.34%. And the S&P 500 went up 0.94%. And finally, the gap got filled, guys, in the SPY. 420 points, 420 bucks. And in the case of the SPX, which is the cash index, because you guys know that the SPY tracks the S&P 500. In the case of the cash index, the gap got filled, 4,200. The fat number, Google. Welcome, Yanis. Wiki, 729. NVDA, Tessie. Alrighty, absolutely. So the gap got filled. And as of now, we have a very, let's say, special situation over here. So the S&P 500 is not that overextended. As you guys can see, it is in an uptrend above an upward sloping 200 DMA, upward sloping 100 DMA, above a semi-ascending 5 DMA. Nothing, absolutely nothing wrong with the S&P 500. I don't use the relative strength index a lot, guys, but we can see how on the 4-hour chart we observe the RSI of the SPX sitting at 70 points. A bit elevated, nothing crazy. If we pull up a daily chart, then we can confirm that the S&P 500 or the SPY, I can pull up here the SPY, is not that overextended, right? However, guys, when it comes to the Qs, that's a whole different story. You have to be very careful chasing stocks over here. Take a look at the triple Q. You guys know that the triple Q tracks the NASDAQ 100. Okay, the NASDAQ 100 went up today. Sorry, between yesterday and today, the NDX went up 500 points. A monster push to the upside. And over here, we can see on the daily chart, the relative strength index of the triple Q sitting at 73 points. Take a look at the NASDAQ 100. This is the index that the triple Q tracks. And we can see the same situation, a very good looking chart. We can see over here a clear breakout from 13,752 points, an upward sloping 100-day moving average, or also a semi-ascending 200-day moving average. Nothing wrong with this chart, but the Qs are overextended. So we could be about to see a situation in which the SPY maybe could keep on going higher. You guys know that the most important stocks inside the SPY and the S&P 500 are the big tech stocks, the Googles of the world, the Metas of the world, the NVIDIAs of the world, the Amazons of the world, and so forth. So those stocks represent something like 25% of the total market cap of the S&P 500 or the SPY. So if those stocks happen to take a rest, we need to see a rotation from money or of money from those stocks into two other very important sectors of the markets. I'm talking about financials and I'm talking about healthcare. So what happened today with those sectors? Yesterday we saw a very broad rally in the markets, like the 11 sectors, or I think that pretty much the 11 sectors went up yesterday. However, today, the financial sector joined the party, which is a good sign. The financial sector also went up yesterday. Today it went up 0.74%, but we still are seeing over here the healthcare sector lagging. So maybe, and this could be a good sign for the SPY, but not a very good sign for the triple Q. We could see a rotation from the winners of today's trading session, which happen to be higher multiple sectors that are, let's say, composed by the big tech stocks. So technology went up today 2.05%, communication services went up today 1.80%, and consumer discretionary went up today 1.55%. When we talk about consumer discretionary, we're talking about Tesla and Amazon. Both stocks went up today. How much did Tesla? Let me see. So Tesla went up today 1.74%, nothing crazy, but Amazon ended up going higher. Then we have communication services. When we talk about communication services, guys, we have Meta and we have Google. Google went up today a lot. And when we are talking about technology, we are talking about Apple, Microsoft, NVDA, AMD, and so forth. So tomorrow's trading session is going to be a tricky one. Most likely, remember, we have options expiration. So that's an event that occurs every third Friday of the month. So tomorrow we're going to have a massive amount of indices option, stocks option, future options, and so forth expiring. We have exactly $2.7 trillion worth of options expiring tomorrow. So that's a day in which we see volatility picking up. So the market makers usually move the markets up and down in order to prevent both the calls and the puts that are going to be expiring tomorrow from expiring in the money. So that is something that you need to keep in mind. Also keep in mind that tomorrow at 11 a.m. we have Mr. Jerome Powell speaking. There is an event or some sort of an event between Powell, Ben Bernanke, which happens to be a former president of the Federal Reserve, and the president of the Federal Reserve of New York, John Williams. That is going to be taking place at 11 a.m. Eastern Standard Time, so please avoid taking trades between, let's say, 10:50 a.m. or 10:50 a.m., yeah, let's say 10:50 a.m., 10:45 a.m., and until Powell is done speaking, because this guy is probably going to be moving the markets. So if you want to take trades as soon as the trading session opens, be mindful of that, because Powell is going to be talking at 11 a.m. Eastern Standard Time. So in the case of the SPY, let's talk about this index. So the gap got filled, 420, or almost got filled. What was today's high? Let me see. Let me double check on that. So today's high was 419.74, almost got filled. So this level is going to start to act like a magnet. So let me pull up here the daily chart. There you go. Okay. In tomorrow's trading session, I am seeing these possible scenarios. The bulls opening above 420. That could happen. That could very well happen. If the bulls happen to open above 420, we have a gap up to 423. Be mindful of that if the rally continues. So we could still see the SPY going higher at around $3 or something like that. At 423, I am expecting the bears to be able to put on a good fight. So that could be a spot in which we could be potentially fading the rip. However, to the downside, this would be a better scenario, according to my opinion. I have 416. What about a pullback down to 416? If the bulls happen to be able to hold 416 as support, we are talking about a previous resistance back from mid-April, and this is also a previous resistance back from mid-February. So a retracement down to 416, in my opinion, could be a viable dip. However, what about a further drop? What about the bulls paying another visit down to 413? That could be another spot in which I could be potentially interested in buying the dip. And as I just told you, since the Qs are a bit overextended, and since the most important stocks that trade inside the Nasdaq 100 are inside the triple Qs, those stocks move the markets a lot, unless we happen to see the healthcare sector and the financial sector really doing the heavy lifting. I am more inclined tomorrow to buy the dip at either 416 or 413 instead of going long the SPY, holding 420 if the bulls happen to open the trading session above 20. And remember, and as I just told you, if we happen to see an acceptable process of consolidation above 420, I can see the bulls filling the next gap up to 423 bucks. So tomorrow is going to be a very interesting day for the markets as a whole, but mainly for the SPY, because in the case of the Qs, guys, take a look, and I was showing you guys this information. This chart is overextended. So I am expecting a pullback or at least a further process of consolidation slightly above 335 bucks, but nothing goes up in a straight line. And both the Triple Q and the Nasdaq 100 are extended. So if you ask me, and I guess that you guys are going to ask me about AMD, what am I talking about here? Nothing wrong with advanced micro devices. I have been taking trades with AMD recently, a bunch of trades actually. But am I going to be buying AMD tomorrow at 108, 109? That's not the trade that I am thinking about. I would wait, or I would rather seeing a retracement down to 10. This would be 103, 103 bucks. This happens to be a previous resistance back from mid-March. So if I happen to see AMD retracing down to this area, and if the bulls happen to hold 102.50, 103 as support, then I might be a buyer of the dip, unless the markets are obviously falling apart, and unless I see the semiconductor ETF, the SMH, getting killed. So in the case of AMD, I'm not going to chase this stock. Nothing wrong with the technical chart. We can see over here AMD above the 200-day moving average. We can see an upward sloping 100-day moving average. But as you guys can see, and I have told you on multiple occasions, these moving averages tend to act as or like a magnet. Okay? So AMD is, as of now, guys, something like 28% above its 100-day moving average. So I am expecting a pullback. I'm not saying that AMD cannot keep on going higher, but I am not going to be chasing AMD above 108 bucks, 109 bucks. So be careful about that. Take a look at the RSI of AMD on the 4-hour chart. It is sitting at 80 points, overextended. So a healthy pullback would be nice in order to go long AMD at around 103 bucks approximately. I am seeing over here Tesla. Let me take a look at Tesla. Okay. So what did Tesla do today? It went up today 1.74%, closed the trading session at $176.89. I am going to zoom in here. And guys, take a look at the spot that Tesla closed the trading session at today. 176.89, slightly below 177. Very important spot for Tesla. At 177 bucks, the bulls already failed on May 12th. They also failed on May 8th, and this is also a previous support back from mid-March. So in the case of Tesla, watch out for Tesla opening the trading session tomorrow slightly above 177 bucks. That would be a very good sign for the bulls. So they could be potentially being able to gather momentum in order to fill the next important gap up to 188 bucks. From 177 bucks, 178 bucks, up to 188 bucks, we are looking at a 10% profit trade. And keep in mind that in the case of Tesla, we are not seeing the overextension that we are seeing in the case of AMD and NVDA. So we could also see a rotation from the big winners of today's trading session, AMD and NVDA and Google, over Tesla. That could very well be the case. But mind you, Tesla is in a major downtrend. We can see a downward slope in 200-day moving average. We're seeing encouraging signs, though. Tesla is above the 100-day moving average, and as of now, the stock of this company closed today's trading session also above the 5-day moving average. So in the case of Tesla, process of consolidation or closing candles above 177 bucks is bullish, and this could imply that we're about to see the bulls making a push higher up to 187 bucks. So in the case of Tesla, the overextension doesn't apply. Let me take a look at the market structure of Tesla. So what is demand and supply looking like over here? Let me see buyers and sellers. Okay, let me pull up here this chart. Okay, so on top of this chart, we have the demand, so buyers. At the bottom, you guys can see the supply or sellers. And the demand is starting to decrease, as you guys can see over here, this blue shaded region. However, the supply is also decreasing below the demand and below the average. These dotted lines that you guys can see over here, or this dotted line that you guys can see over here, represents the average supply. So the supply is below average and decreasing, and it is way below the demand. So unless the markets take a hit tomorrow because Powell, I don't know, said something that the markets didn't like, or if the market makers want to bring the indices down because we have more calls expiring tomorrow relative to puts, then in normal market conditions, I'm thinking that Tesla might be heading up to 188 bucks. There you go. 187, yeah, it's in the cards. It's in the cards, no doubt about it. Needless to say, guys, I'm telling you that the Qs, in my opinion, are overextended. I just told you, in the case of the NDX, the NASDAQ 100, which again happens to be the index that the Qs track, this index is overextended. It is needing some sort of pullback, a healthy pullback. But the NDX could keep on going higher tomorrow. Why not? So if that is the case, Tesla could be easily filling that gap up to 188 bucks, or since Tesla hasn't gone as higher or as high as the AMDs of the world and the NVDAs of the world, take a look again. The RSI, the relative strength index of AMD, on the 4-hour chart is sitting at almost 80 points. We have a bunch of gains accumulated as of now on AMD, so that's a temptation for many market participants in order to lock in the profit and maybe move or rotate that capital into other stocks. And in the case of Tesla, there is no overextension at all. So we could have market participants seeing Tesla like, okay, you know, I already made a lot of money on AMD. This stock has gone up a lot. Maybe there is not really much room to the upside. What about Tesla? Hey, take a look. So Tesla is right below 177 bucks. It has a gap up to 188. So maybe let me close my winning position on AMD and let me rotate into Tesla. That could very well happen. Absolutely. Janice, Google, another big tech cap stock. Let me see. Alphabet. So again, take a look at these guys. Nothing wrong with the technical chart. Again, we have an upward sloping 100 DMA. The 200-day moving average is still downward sloping, which is not a good sign. Okay. We have an extremely upward sloping 5-day moving average. Nothing wrong with that. But Google is too far away from home base. When I say home base, I am talking about the 200-day moving average and the 100-day moving average. So I would rather see over here a healthy pullback down to this 5-day moving average, 119 bucks approximately. This could be a buy the dip opportunity if we don't see a collapse in the triple Qs and the S&P 500 and so forth. You guys know what I am talking about. Am I going to be buying Google over here at 124 bucks? No fucking way. Take a look at the RSI of Google, 83 points on the 4-hour chart. And again, this is not a religion. This doesn't imply that Google is going lower necessarily. But this stock is overextended. We have a bunch of gains accumulated over here. And from a psychological standpoint, guys, as human beings, when we see a lot of gains accumulated, the temptation in order to lock in the profit, in order to secure that profit, is high. So I'm thinking that maybe a pullback down to 119 bucks, approximately, as I just said, 5-day moving average would be a viable pullback in the case of Google. Let me take a look, by the way, at the market structure of Google, supply and demand. So what is it looking like? By the way, guys, one of the stocks that I am going to be keeping a close watch on tomorrow is going to be C3AI. Yesterday, you guys and I were able to take a successful trade over there. I am going to show you what's my plan on C3 AI. So take a look at the market structure of Google. Again, this is some sort of a picture of what the demand and the supply is looking like. We cannot, when we see a technical chart, guys, we cannot see, I mean, if I see the technical chart of Google, I know that buyers are in control. Absolutely. This is a major uptrend, okay? But I don't really have a precise idea of what the supply and the demand is looking like. So this tool allows me to take a look at that. We have an ascending demand that is above the supply, and the supply is starting to decrease. So that increases the likelihood for the bulls of Google to find support at around 119 bucks, again, 5-day moving average, and then bounce back up in case we see a retracement of Alphabet. Thinking about put, Janice says, yeah. Well, I don't like buying puts on uptrends. I do it here and there. There are always exceptions to the rule. But let me take a look at what could be the next gap of Alphabet. Let me pull up here a weekly chart. So the bulls are making a test of 123 bucks. It is a big level, guys. 123 bucks is a previous resistance back from August of last year. And to the upside, if Google keeps on going higher, we have a previous support at 126 bucks. 126 bucks is a previous support back from February 21st of last year. So the stock is overextended. It is due for a pullback. But I wouldn't be buying puts over here right off the gate. I would wait for Google to fill the next gap, because this gap was pretty much filled, guys, up to 123. So I would wait for Google to fill the next gap up to 125-ish. As I just said, previous support back from last year, in order to try to get some puts on Alphabet. But yeah, this is a puts candidate. According to the way that I take my approach, guys, when it comes to shorting uptrends, such as Google, I prefer to wait for an important support to be broken to the downside in order to grab puts. So say we see a retracement of Google down to 120, and if the bulls are unable to hold this support, I would be getting puts over there. I don't like guessing tops, and I don't like guessing bottoms either. So I would wait for this support of 120 to be broken to the downside before taking puts. But I give you that the stock is overextended, so maybe 125 could be a potential spot in order to get some puts. But remember, guys, we said the same thing about NVDA. Take a look at NVIDIA. Let's take a look at NVIDIA. So it was overextended when it was at 260. It was overextended when it was at 276. It was overextended when it was at 295. It is still being overextended, far away from home base, but it keeps on going higher. You see what I'm saying? So the best thing, according to my opinion, in order to short uptrends, is waiting for an important support to be broken to the downside on good volume and momentum, and then we go all in puts. By the way, NVIDIA is another stock that is very overextended. We can make the case, unlike AMD and Google, that NVIDIA saw a very interesting process of consolidation for a bunch of weeks between 264 and 280. So NVIDIA is not that far away from home base. So believe it or not, it could still keep on going higher. So NVIDIA is sitting at 314. Let me see. We have another gap, right? Let me see. What's the other gap? 322, guys. 322 bucks is a previous resistance back from November of 2021. How about that, guys? When we had the Federal Reserve printing out money left and right, 120 billions on a monthly basis, and when we had zero interest rates. That's interesting. Nothing wrong with the chart. Clear uptrend, upward sloping, 200-day moving average, upward sloping 100-day moving average, upward sloping 5-day moving average. But in the case of NVIDIA, this stock is not as overextended as AMD and Google. Could Netflix sell off hard tomorrow, or could it top off a little higher? Do you happen to have puts of Netflix? Metrop, let me see. It was upgraded today, I think, right? That's why it went on a tear. It can keep on, yeah, it can go higher, guys. No doubt about it. It failed at a foreseeable, or at a place in which it was foreseeable that the bulls could find resistance, 375. This is a previous resistance back from early February, and also a previous, let's say that this is a previous resistance back from early February. Okay, RSI sitting at 80 points on the 4-hour chart. This is another uptrend, upward sloping 200-day moving average, upward sloping 100-day moving average. I don't know, guys. This is a tough one. So if the bulls can consolidate above 375, the previous area of resistance that I just told you guys about, what could they be doing? So what other gap they could be thinking about filling? So let me see over here. We have another gap up to, there you go. Yeah, we have 390, guys, in the cards. 390 is a previous resistance back from March of last year. So that would be the next gap. But yes, we can make the case that this is some sort of double top over here. And in that case, Netflix could be retracing down to 363. I wouldn't be a buyer of Netflix over here because of the very aggressive push to the upside that we saw today. But be careful. If this stock happens to close candles above 375, it could keep on going higher. Or maybe a buy the dip opportunity could be showing up at 363. 363 bucks is a previous resistance back from mid-February. So this could be a buy the dip opportunity. A bit overextended over here. The push to the upside that we saw was very aggressive. And yes, if you guys happen to see Netflix failing at bursting above 375, this could very well be another short opportunity. Let me take a look at the market structure of Netflix over here. So what is supply and demand looking like? Let me see. Alrighty. And take a look. Yeah, we have an ascending demand that is way above the supply. A bear would argue that the supply is also rising, but it is below average, and the demand is way above the supply. So don't be surprised, guys, if Netflix consolidates above 375 bucks and goes higher, or any visit or any quick drop down to 364 could be a viable dip, according to the market structure. You have calls, Metrop. Okay, good. So yeah, so you're going to be rooting for Netflix to open the trading session about 375. Sure, absolutely. That's what you are going to be thinking about. Okay, so we already went over Netflix, AMD. Let's go ahead and take a look at Amazon. Let me see. If you guys have any other requests, please let me know. Amazon, I was buying puts here left and right, guys, 2 weeks ago. And lucky enough, I closed all of my puts before Netflix took off. Lucky enough. Once the bulls were able to burst above the downward sloping 200-day moving average, I told the guys of my Patreon, like, hey, okay, guys, we're done shorting shorting Amazon, and this stock could be going higher. Okay, in the case of Amazon, a bit overextended, nothing crazy. So we have a very important spot over here at 117 bucks, and I'm going to draw a line. 117 bucks. Amazon, by the way, went up today 2.29%, and it closed the trading session at 118 bucks and 15 cents. 117 bucks is a very important spot, guys. Previous resistance back from early February. So watch out for Amazon, because as I just told you guys, we could still see some sort of rotation from the most overextended stocks in the queues into the less overextended stocks. So we could still see Amazon going higher, or Tesla, and we could see some sort of profit taken, mostly on the chip stocks, on the semiconductor stocks, AMD and NVDA. Amazon consolidating or closing candles above 117 bucks could be a sign that the bulls are gathering momentum in order to fill the next important gap up to 122 bucks. Previous resistance back from late April and previous resistance back from, this is late October of last year. Another possible scenario, because as I just told you, this area of 117 bucks is a very important one. If the bulls open the trading session below 117 bucks, and if they happen to fail at bursting above it, watch out for a quick drop to either this upward sloping 5-day moving average, 113 bucks, or maybe 112 bucks. In the case of 112 bucks, this is a previous support back from September of last year. So as I just said, or as I told you guys in the beginning of the live stream, I am not thinking about chasing any stocks over here. I think that there are better opportunities in other stocks, bank stocks, some stocks in the financial sector look kind of attractive. Maybe the Russell 2000, the IWM, which has been under a lot of pressure lately. So there are sectors of the markets and a bunch of stocks that are not overextended and that could be being benefited from a rotation, because we have a bunch of gains accumulated in the big tech names, the Microsofts of the world, the Apples of the world, needless to say, the AMDs and the NVDAs of the world. In the case of the IWN, for instance, just to give you guys some trading ideas, a process of consolidation above 177 bucks, which is an important area in technical terms. This is a previous resistance for the IWM back from mid-March. This is also a previous resistance back from December and January back from December of last year, and this is also a previous resistance back from October of last year, late October and early October of last year. So this is an ETF that I am keeping a close watch on. If the bulls can close candles above 177 bucks, we have a first gap up to 181, 100-day moving average, and then we have another gap up to 183. And in the case of the IWM, there is no overextension at all. So as I just told you, I am not thinking about chasing any big tech stock. Amazon looks kind of, let's say, compelling. Tesla as well, as I just told you. But in the case of the big runners of yesterday's and today's trading session, I am going to be waiting for a retracement, and then I am going to be evaluating if I can go long. And in the case of buying puts, as I just told you, I don't like guessing tops, so I don't see myself getting puts of NVDA or AMD either. C limited, sure. Let me take a look. 523, and we are as of now. Hey, by the way, guys, NVIDIA posts earnings next week. We are 33 minutes in. Before going over C limited, so let me take a look at what the markets are waiting for on NVIDIA next week. I think that NVIDIA posts earnings, and don't quote me on this. When do they post earnings? Let me see. May 24th. When is that? Wednesday or Thursday? Please let me know, guys, if you happen to have a calendar handy. Take a look, guys. The expected move for NVIDIA next week, 8%. And remember, since NVIDIA is about to post earnings next week, so we have the implied volatility going higher. So if you are buying either calls or puts now, or from today and on, you're going to be paying a very expensive premium. So that's not a stock that you want to be involved with until they post earnings. C limited. Let me take a look at C limited. I think that this stock was about to post earnings. Hump day. Oh, yeah. What's the ticker symbol of C limited? I don't see it here, guys. Sorry about that. C world, C wits. Does anyone know the ticker symbol of C limited? Let me see. There you go. SE. Wednesday 24th. There you go. Ooh, this stock collapsed, guys. Take a look. Thank you. Rowie, yeah, this stock collapsed after earnings. So, um, well, lost today the 100-day moving average. Wow. The next important support over here, guys, I'm going to draw a line. 200-day moving average, which happens to be declining, so it might not act as a strong support. And take a look at how this downward sloping 200-day moving average happens to coincide with a previous resistance back from mid-November of last year. So this would be the last line of defense for the bulls, $66, and a bit oversold with the RSI sitting at 27 points on the 4-hour chart. Maybe a quick drop down to $66 could be a buy the dip opportunity because, as I just said, this is the last line of defense for the bulls. This moving average is downward sloping, so it shouldn't be a very strong support for the bulls. I would rather see buyers showing up and recapturing $72, this upward sloping 100-day moving average. And if that were the case, I might be grabbing some calls. I would take a look at the earnings report before doing so and take a look at how this 100-day moving average happens to coincide with a previous support back from late April at around 70, let's round it up, $72. So don't touch it below $72 or pay close attention to the limited, and let's see if the bulls can hold this 200-day moving average at around $66. I don't think this stock has an important institutional participation. You guys have to keep in mind that when any given stock that has an important institutional participation gets killed after earnings, most institutions let's say that it takes for most institutions in order to decide whatever they are going to do with any stock or with the stock of any company that just posted poor earnings reports. So it takes around 2 days for big institutions to decide upon the stock of that company that posted a poor report. But in the case of the limited, yeah, maybe the dip could be bought up tomorrow. That could be the case. I don't know whether the stock of this company has an important institutional participation or not. But when you guys see the UPS of the world and the FedEx of the world and the big stocks of the world falling off a cliff after having posted earnings, you should let 2 days pass by before buying the dip, because the downwards pressure usually lasts up to 2 days until the institutions finally dump all of the shares that they consider that they need to sell because of a poor earnings report. So watch out for $72. Let me take a look at the market structure of C Limited. Do I have it available? Yeah, I do. Okay, let me see. Can you please repeat the levels for IWM, the stock you're not chasing? Absolutely. That's the ETF of the Russell 2000, guys, which is the small caps index. Okay, in the case of Limited, wow, take a look. Remember, supply or sellers are at the bottom of the chart. On the top, you guys can see the demand. The demand is starting to decrease, and the supply is like skyrocketing and way above the demand. This is not a good sign. So we had a bunch of market participants already dumping shares into the earnings report, and we might see this stock paying a visit down to $65. Yeah, in the case of the IWM, sure. Remember, this is not a stock. This is an ETF, the Russell 2000 ETF. So the index of small caps. If the bulls can consolidate above 177, we have two gaps, as I just told you. 180, 181, 100-day moving average, and then we have 183.50 approximately, which is a previous support back from late January. This is going to be the stock that is going to be on the very top of my watch list tomorrow, because as I just told you, I'm thinking that the big tech stocks are due for some sort of rest. They need to take a rest, in my opinion, and we might see money rotating into other sectors of the markets that are not as overextended as the Qs or as the small, big tech stocks group that have been doing the very heavy lifting since this 2023 started out. So 177, important and sorry guys, I'm tired. Interesting spot, if I can speak today. You guys know that I live stream for the guys of my pay or for the members of my Patreon throughout the whole training session in Spanish, obviously. Okay, and wow, at this time of the day, I'm like very tired. I can barely speak. Cisco, sure, absolutely. Didn't they post earnings yesterday? Yeah, they did. And take a look, the dip got bought up. Yeah, they did it. So Cisco went up today 1.20% and closed the trading session at $48.20. So very good sign, guys, because the stock dropped like a rock after having posted earnings. Take a look. Yeah, it dropped. But the dip got bought up. So the markets, so the price action, guys, the net aggregate opinion of the markets is like, okay, we initially sold the stock, but now we are kind of giving it a second thought, and we think that your report was acceptable. So big level over here, $48.50. Cisco closed today's trading session slightly below this area. Okay, $48.30. This is a previous, the 100-day moving average happens to coincide with a previous support back from mid-March, and this is also a previous resistance back from late January, and also a previous resistance back from early January. So an important spot if the bulls of Cisco can consolidate slightly above $48.30-ish. We have a gap up to $50. We can round it up. $50 is an area in which the bulls failed at on March 6th or in early March, and this is also a previous resistance back from mid-January. Good looking chart above the 200-day moving average. The bulls closed slightly below the 100-day moving average, but this is a stock, by the way, guys, that has a huge, massive institutional participation, and the dip got bought up right off the gate. So this is a good sign. Buyers are interested in the stock of Cisco. Let me take a look at the market structure over here of Cisco system before going over charge point. Sure. So what do we have over here? Okay, the demand is below the supply, and the supply is going higher and above average. So we can say from a market structure standpoint that sellers are still in control of the technical chart. So if Cisco opens the trading session below this 100-day moving average or below $48.30, and if the bulls are unable to burst above this level, then this could be a sign that maybe lower prices are coming up for Cisco, despite the fact that the dip really got bought up immediately right off the gate. This is also a good sign. Charge point, this is a very ugly looking chart. I was taking a look at charge point earlier on today. Take a look at this. A total disaster, guys. Major downtrend below a downward sloping 200-day moving average, downward sloping 100-day moving average. There's nothing constructive to say over here. Some people might be trying to guess the bottom. Most people like to guess bottoms, guys, and it is usually a losing game. Take a look at what happened to me with PayPal this week or last week. I tried to guess the bottom. The stock shot up higher once I opened the trade. I didn't lock in the profit when I should have, and then since the trend is down, the stock just kept on going lower. So, shit happens. I should have locked in the profit as soon as the stock shot up higher. So the stock of this company or the shares point is under the absolute control of sellers. Nothing constructive to say over here. Most people or some people are going to try to buy this dip, $8.15. And why? Well, because this is a previous support back from early May, and this is also a previous support back from late December of last year. And yes, this stock could bounce back up, but don't try to guess the bottom, guys. Just try to just wait for buyers in order to show up. So what about Shorts Point bursting above $9.43? This could be a good sign. This is a very well-defined previous area of resistance. $9.40 is a previous resistance back from mid-May, and this is also a previous resistance back from mid-April. So if the bulls happen to burst above $9.10, then you have a confirmation that buyers are stepping in which case we have two potential gaps to the upside. The first one up to this downward sloping 100-day moving average, $10.12, and the other gap up to $10.72, previous resistance back from late March of last year. So I would wait for Shorts Point to burst above $9.40. And I guess that the market structure doesn't say anything constructive either. The market structure of Shorts Point, demand and supply. Let me take a look. And take a look, guys. A collapse in demand, and the supply is also decreasing, which is signaling some hope for the bulls over here. But the supply is still above the average. There you go. Shorts Point. Awesome, guys. So, will you look at Upstart? Yeah, sure. Before I wrap it up, let me go over to Upstart. Let me see. Wow, it went up 14% today. Closed the trading session at $24.59. Did any news come out here? Trading higher and continued strength. No, nothing. No news. Up, underweighted. No news, guys. So maybe this was some sort of squeeze. I had it on my watch list yesterday, but it went lower today. Don't chase it here. We have a big resistance coming up at $26.50. This is a previous resistance back from early February. And let's see if the bulls, instead of keep on going higher, because this push to the upside was very aggressive, let's see if the bulls rather consolidate above $23.60. This is a previous resistance back from mid-November. If this support happens to be held, and if the bulls, let's say that close candles for, I don't know, 2 or 3 hours, slightly above $23.60, then this could be a sign that they could be about to fill this first gap, the one at which they filled today, $25-ish, and then up to $26. Interesting spot, $23.60 over here. Let me take a look at the market structure of UPST, Upstart. There you go, Upstart Holding. Alrighty, and take a look, buyers in control, guys, good sign. Ascending demand, and the supply is below average and way below the demand. So this is definitely an area of interest, $23.60. If this support happens to be broken to the downside, we have a big gap down to $20.50, which is a previous resistance back from mid-May, and this is also a previous resistance back from late November, and also a previous support that acted as such on multiple occasions in September and October of last year. There you go. PXMD. Okay, PXMD. Let me see, PXMD. Pax Medica. This is a penny stock. I knew it. I don't deal with penny stocks. Never ever, guys. That's a golden rule that I always obey. So nothing constructive to say over here, bro. Went up today 7%, major downtrend, and I would advise you guys to stay away from penny stocks. I have told you on multiple occasions that the volume with which most of these penny stocks trade with is very low. So the natural areas of support and resistance usually do not act as such because the volume is very low. So if we happen to, if an important or a big buy order happens to be filled, that's it. Forget about levels of resistance. And on the flip side, if a big order happens to, if a big sell order happens to be filled, forget about levels of support. So these stocks are extremely susceptible to you know to um, let's say to sizable orders, which are easily being placed because take a look at the value of at the numerical value of these stocks, $1.40. So as I just told you, the volume is very low, and therefore the logical areas of support and resistance usually do not act as such. So just stay away from this. Eli Lilly. All right. Is this going to be the last stock that I am going to be going over before I wrap it up? Uptrend, guys. We can see over here an upward sloping 200-day moving average, upward sloping 100-day moving average, upward sloping 5-day moving average, a bit far away from home base. But a bull would argue that Eli Lilly is kind of working on some sort of bull flag pattern. Let me see. Bullish flag pattern. This is not an academic bullish flag pattern, but this looks very bullish, guys. Very, but very bullish. So if this bullish flag pattern happens to be completed, how high can Eli Lilly go? Let me see. Very good looking chart. Oh, it is at an all-time high, guys. So Eli Lilly is in no man's land. Let me see again. Okay, so the 52-week high is sitting at 445. We have the 5-day moving average at 435. So this could be an interesting trade, guys, picking up some shares with Eli Lilly holding 434. Again, upward sloping 5-day moving average. And if that were the case, we have a gap up to the 52-week high at around 445 bucks. This would be a 2.4% profit trade. Very good looking chart. And despite the fact that Eli Lilly is very far away from its 100-day moving average and its upward upward sloping 200-day moving average, it is consolidating. So the bulls could be thinking about going higher on Eli Lilly. Yep. Let me do Bow. Okay, this is going to be the last one, guys. I'm very tired. Sorry about that. Okay, Alibaba, it got killed today. They supposedly posted a better than expected earnings report, but the markets didn't like it. So, a very choppy chart. So, Bow as of now is trading below this upward sloping 100-day moving average and also below the 200-day moving average. Yeah, they lost these two moving averages today, and the bulls also closed below the 5-day moving average. So we all know, guys, that this 80-buck dip has been being backed over and over and over and over again. At 80 bucks, I might give it a shot with a tight stop, probably with a stop sitting at 79, 78 bucks. This could be a trade on Baba. 80 bucks already acted as support back in early May, also back in late April, and this is also a previous support back from mid-March of last year. 80 bucks is worth a shot. It is worth taking a shot, I'm thinking. Or in my case, I would rather see in Baba taking out 93 bucks, so I would rather see in buyers stepping in and bursting above a previous resistance back from early March, $92.75. That would be my trade. If that were the case, the bulls would be bursting above the 5-day moving average and the 200-day moving average, so I would be having a confirmation that buyers are starting to outnumber sellers, which is what I am looking for. But yes, at 80 bucks, I gotta be very honest with you. I don't like buying stocks below the 100-day or the 200-day moving average, but at 80 bucks, I would be pulling the trigger most likely. Yep. Let me take a look at the market structure of Alibaba. So what is demand and supply looking like over here, Alibaba Group? Let me see and take a look, guys. The market structure looks very well. Looks very good. So we have an ascending demand that is way above the supply. The supply is above average, but it is below the demand. So we have buyers looking at Baba. So 80 bucks, I mean, with a tight stop. I would be setting my stop at 79 or 78 bucks. Give me 80, Baba. I'm in. There you go. Absolutely. Guys, that's it. So we are, let me see, we are 55 minutes in. Wow, this was abusive from you. No, I'm kidding. I really like going live for you. So just don't chase anything, guys. We are extended. Take a look at the cues. Be careful. Buy dips. Sell rips. That's what I'm doing. So throughout this year, the trade that has been working out the best is fading move, guys. So I am not telling anyone to go all in NVDA puts, but be careful. We are extended. So the most important stacks of the market trade inside the triple Q. The most important stacks market capitalization wise are overextended. We are due for some sort of pullback. Tomorrow we have options expiration. Remember, we might see volatility picking up, and at 11 a.m. we have the chairman of the Federal Reserve, Jerome Powell, speaking. So be careful out there, and good luck, guys. Okay, short triple Q with extrinsic value maybe, because if you guys buy triple Q puts, you're going to be buying weekly or maybe 0 day to expiration puts. If any of you wants to take a shot at the triple Q with puts, and you guys buy puts that expire 1 or 2 months out, that I can agree with. But don't short these uptrends with options that expire in 2 days or the same day. Take care, guys. Enjoy the rest of your day, okay? I will be posting some place. By the way, I am in Bank of America. I don't know if any of you guys followed that trade, but I got calls. I told you in my channel today, I got calls of Bank of America, and as I closed the trading session already up like 80 or 90 bucks. So take care, guys. Enjoy the rest of your day, okay? Bye. Thanks for joining me. Bye.